Hey. Today is a very good Sunday, a very good and fine Sunday afternoon. And this one is a first broadcast. If you will be watching this video, or if by good luck you joined this live, I will be trying to teach and do analysis basically for those who are trading different assets. And the asset that I will be focusing on mostly, which most people also enjoy trading, is gold. Because I understand most people are always excited by the volatility of gold. So this is the money tribe, forex, and we are focusing mostly on let's get educated so that we can get the money with the right channel and procedure of education. Most of us can actually transform from struggling with the trading to becoming better and better market analyst in one way or the other, because I understand people are at different levels, including myself, and I want to go straight into doing what I know I can do so that you can take what you can take from it. And the major factor is when you apply what you know, because knowledge without application is nothing. And for my broadcast, I'll definitely be using very simple things. I don't use anything sophisticated, and my voice will be enough. If you don't want to listen to my voice, you don't want to listen to this stream, I won't bother you. But for those who will take their time and listen to this analysis might come today, tomorrow, and in the course of time at different scenarios of the market. But they can help you. I'm telling you, if you are somebody who want to trade and you take this analysis keenly, they can definitely help you make your market and your personal decisions and to help you focus on whatever is happening in the charts, because there's a lot of noise in the market, and whenever it opens, everybody's chasing profit, everybody's chasing a trade here and there. Without the right information, you are not going to make it. And the quantity and amount of information that somebody requires to make the right choices in the market is very wide. So I just want to believe that you are getting me loud and clear wherever you are. And because I'm using simple tools here, if I'm not clear, maybe I'll be better next time. The chart in our screen, I have here this gold, USD gold chart. And since today is on Friday or on Sunday, the market is definitely closed for the time, and it will be opening tonight, Kenyan time. It will be opening so that we can begin another marathon for the next week, starting 26, as we also end the month. So this is a very interesting week. If you are anybody who is trading gold, because gold and all these markets always make history at some point, and the history that we are watching gold going to make right now is based on our all-time high, because gold is a very bullish asset, and it is climbing up. Throughout the last week, gold was very aggressive, and it almost hit the target, which is the 5,000 target. It almost hit the 5,000 target, and if I can just show you, this is the chart, and we can easily check it. This is the legendary 5,000 mark. And if we are headed towards the 5,000 mark, it means that this week's open will definitely be expected to run towards that mark. But the only thing about the market is that when people anticipate something as a trader, when you hear people saying it will be bullish, it will be bullish, let me remind you, in case whenever you hear people saying such kind of a statement, it will go up or it will go to the 5,000 mark, the market always does not wait for them. The market does not wait for them. Immediately that speculation is already there, it will go up. The move is already happening. So by the time you are waiting for it will go to the 5,000 mark, like by tomorrow when the market opens up, it might even open with a very huge gap up to the 5,000 mark. And because that is just speculative thinking, that whenever you speculate and the market uses a lot of data to determine price, including that speculation, even though there are very many factors which influence price at any given time, but the fact that those who are in the market are speculating something, that already determines price. That's why when they say when it's already going up, you might have just missed the move. When you anticipate it will go up, that is the moment you need to enter into the trade. So I have been trading gold for some time, and I know there are many comrades here and there who share in trading gold. And through these podcasts and analysis, we will grow somewhere. We will definitely find a way to balance, and people can easily learn from such kind of content. I know that, even if I'm not a very good content creator, but because there are people who want to be educated, there are people who want to learn, and I know I can spend a lot of time explaining myself over and over again. What is important is that in the long run, we trade gold, like I say, and we watch the thing that I say, and we can come back later and confirm that whatever we were analyzing or saying actually is what happened in the market. So, let me give you a bit of context here. If I give you a bit of context here in this gold chart, gold has been very bullish. If I go back to the 1 day, if I take you back to the 1 day, the daily chart, if I take you back to the daily chart, and let me just make it look nice. That is the daily chart from my side here, which is the basic thing. It cuts across both sides. Now, this chart might be messy, but we know whatever is green is bullish, whatever is red is bearish, and whatever I expect you to see here will be definitely visible even from your end. So this is our chart. And just to make it, I can easily make everything here. Let me hide everything. So this thing is pleasant to the eye. I'll teach you gold. I'll teach you, and you will learn. Yeah. So if this is the gold daily chart, the only thing that we do with the daily chart is it shows the overall daily direction, because this is just a weekly analysis that will guide us through to the next week. Will help us in mitigating or in making decisions, especially early decisions for the early part of the week. We can easily see from this chart that from somewhere here, from this level here, this resistance here, there was a resistant point here. There was a resistant point here, this zone here. From that zone, seems like I might just need a cleaner gold chart. Let me just, for gold, so long as it's a gold spot chart, it will just be gold. Yeah, and I can also take this to the daily. The good thing is that the market is closed right now, and just simple analysis. When you are trading gold, you need to know what moves this thing called gold. In that way, it's when you can know the apparent direction that it will move. And if I was to show you, since gold is also something that interestingly respects some form of structure, I don't want to take much of your time here explaining this same concept, because the simple thing is that we know gold is going to move. We want to know where is it going to move to. The last time gold hit this resistance was in August 25th, 25, August 2025. This was around that time, August 2025 last year. So you can see around that resistance, gold was constantly hitting that resistance and coming back. So it stayed on that range. And because I'm trying to assume most of those who will be watching this are people who are advanced in trading, this is what most of the time the market gives you as an accumulation phase. So this thing accumulates here with a little bit of manipulation. You can see there, it broke there, made it look like we are all going up. This is what I call, if you can see where my demonstrator is, that is what I call a fake leg. It gave us a fake break with a fake leg. Then it went back into our range. So it ranges there for quite some time until because this is I'm taking you here because this is 2025. Yeah, this is 2025, and this range starts at around April 2025. So between April 2025 to, if I brush it off for you, between April 2025, can see that, let's make it a little bit, between April 2025 to, which is around this period of time, April to August 2025, what happens to gold? Gold is in that range. Then slowly but sure, after it breaks this leg that it made there, the fake leg that it had made there, can see that fake leg that gold made there. So if I take you back to this area so that we can just see what happened there. It breaks this leg, you can see there, and it breaks it with a fair value gap. I'm assuming that I'm talking to those who really trade, because you can see there's a fair value gap there. That's a good thing with my charts, it will show you fair value gaps. So it's easy to trade on, which you can see here. The moment it made that leg, you just needed it to trade back into that fair value gap. Then the moment it came down to it, because this is a daily chart, the whole day it went up, the next day it still went up, then the third day it came down, which is mostly on a Thursday. So it went up on a Monday, Tuesday, Wednesday, then on a Thursday it came back into the fair value gap after breaking the leg, because this line, this white line here is our leg where the fake leg was. After breaking that leg, it trades back to the fair value gap, and then the bullish momentum continues. That's where it broke. So I'm just giving you context on how gold behaves. Because gold is an interesting asset. It is a safe haven to it is a safe haven. So it means that some people use it to store value. And it's also a metal, which makes it, some people also use it for the purpose of just beauty and stuff. So there are a lot of things which drive, there are a lot of factors that drive the price of gold, which are very easy to highlight. From my chart here, after this break, so gold went up. I want to zoom in so that we can see. I want to zoom into the daily charts there, but from here, if you are with me still, I want us to make a simple analysis, because so long as I've taught you how to trade gold uses very simple structures, because the factors that drive the price of gold are very pronounced. And in that context, I was definitely telling you they are pronounced in what basis? They are pronounced in that you, so long as you know what is it that will make the price of gold move tomorrow as the market opens, we go very immediately. We go to there are macroeconomical drivers. Yes, things like CPI, NFP, FOMC, and interest rate decisions. And just right now, if I will take you to whatever is coming up next week, we simply need to check it through our trading view. No, not our trading view, our forex factory. Once we check it through forex factory, it is easy for you to know what's going to come up in the market. So let me see if I can share that. Whatever is happening in forex factory is very important, and let me show if I can put it in my whiteboard there so that I can show you something. I need to just show you. So if I can open to my trading view, we are having the concept of macro. I want to show you the concept of macroeconomics, because in the last period, what happened with gold? I think I now have something from Forex Factory that I can show you. Let me import. Let me import the image. I've just taken the image, and it is important that we see this together. It is very, very important that you know what's happening with the Forex Factory. So the Forex Factory help us in knowing what will be happening. And if I take you back to what's happening in Forex Factory, we have something like that. I've just highlighted so that I can have a display of the red folders majorly, because the red folders are the major movers of the market. On Monday of the tomorrow, we have no red news up to Tuesday. And in fact, AUD will be having, which is Australian dollar, will be having a bank holiday. Then gold has no major factors. Major market movers aren't there in gold. But there is an important aspect of Tuesday where there is a tentative orange folder of President Trump speaking. This now makes it interesting, because whenever President Trump speaks, that's a very strong market mover most of the time. So Tuesday we have to watch out for Trump speech, and then on Wednesday we have CPI, this Australian dollar, Canadian dollar. I'm focused into dollar USD dollar pairs. So when I come to on Wednesday at 10 p.m. Kenyan time, we'll be having FOMC, which now makes it interesting, because when you have FOMC, that will be on Wednesday. On Wednesday, when we have FOMC, whenever FOMC is released, just know that's like it is something which shows if it doesn't have a specific figure, but it can be either hawkish than expected and things like that. And that's the Federal Open Market Committee. When they talk and stuff, they talk about interest rates, those monetary policy statements. So those kind of factors can easily make the economic factors to be volatile. So we have to watch out. You watch out for Wednesday in the next week, and we also watch out for because after their statement, then they have a press conference. So that's about 30 minutes of activity that night. And here, whenever we have that kind of so here, this is on from that time. Watch out for the statement because it can also be referred to like the Fed rates. It can also be referred to like the Fed rates and or let's say more monetary policy. So I can say that is a monetary policy. Then we go to that is on Wednesday. Then on Thursday we have unemployment claims. And with unemployment claims that's also important. Excuse me. That will be on Thursday. A very strong red folder. Usually, it's showing the number of individuals who might have said they're unemployed. Because there is like in the US something called the insurance for those who are unemployed for their first time. Like if maybe me today I say that I'm unemployed, so I need to file for some insurance, and that data is released. That data can also be a strong. Is always not cannot it always if it is less than the focus because there's a focus with the with whenever you're using forex factory there is a focus like here. So with that you can easily determine if the focus here is saying that excuse me. So I'll get back to that later. Just a minute. Hello?